Hey everybody, hey, my name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com. Look, apologies for the little delay because again, we had a few issues in the office and yep, now hopefully they're going to get fixed. But look, I'm running this show a little bit later in the day, more from the usual, kind of a couple hours later. But look, we're going to dive into the markets. Hopefully you'll enjoy the session. This is, by the way, a video preview for the webinar, so stay tuned. Hopefully you'll enjoy it, and I'll see you in a bit. All right, ladies and gentlemen, hello, and well, I would normally say good morning, but this time, well, it's a little bit of a different story. Look, as apologies for the delay in this webinar because again, had a few technical issues in the office, so yeah, now we're kind of in the process of fixing all that. But hey, look, things happen, and it's like kind of the best way to start the um, the first day of the week. Ladies and gentlemen, I want to welcome you to the first trading day of this new week and the last month of this year. Ladies and gentlemen, I don't want to say that we made it yet because again, we still have a full month to go through. Let's see how everything unwinds. But yeah, certainly we have done 11 months of this year already. I mean, time flies, market flies. We know we're all preoccupied with the markets, with the financial sector, and certainly it's a busy one. Every day something happens, and to be honest, this year it seems like every day we had some sort of a big thing coming through, big announcement. A few days maybe were like on the calmer side, but still it has been so far a very eventful year. Now look, before we go any further, before we look at the markets and prepare ourselves for this new week, first of all, I want to say that I will not have a webinar on Friday, so on Wednesday the Markets Talk webinar will be on Wednesday, and then basically on Friday I will be absent. So it's only two webinars this week. So please join me on Wednesday as well. But yeah, look, still let's go through Monday, of course. Before we go any further, as always, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute an investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. In the meantime, I will put my usual good morning in the chat room. Hopefully nobody's going to beat me to it. Good morning, everyone. There we go, ladies and gentlemen. Oh, yes, perfect. That was the first one. Ladies and gentlemen, as I keep on saying, this session is meant for communication, for dialogue, and yes, I'm running a monologue here in a way, but certainly the comments, the questions, market-related questions, market-related comments are more than welcome. So yes, feel free to throw something out there, or you want to share something, like I said, regarding the market. Certainly, please feel free. I'm going to be more than happy to, to kind of go into discussion with you. Look, also just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, right. Now then, ladies and gentlemen, let's have a look what's happening. And oof, the wrong page. My account settings, honestly. Look, let me just check. This is my. Let me just check the economic calendar. I think let's start off with that one. Look, what can I say? What can I say? This week, we kicked off already. Let's see what's happening already this morning. S&P Global Manufacturing PMI came out from Australia, came out as expected, 51.6. So that's great, better than the previous, which was in contraction territory. So the market kind of went back into into expansion territory. That's wonderful. From Japan, we had the Ueda speech. There we saw a little bit of yen strengthening. So yes, that's something to kind of keep in mind. But of course, look, don't get me wrong, this is not the only main driver of the market today, because we saw in the early hours market kind of selling off a little bit, and yeah, it was an interesting moment here, I would say, after comparing it to Friday's activity. Rating dog manufacturing PMI from China. Ooh, they're dropping slightly into contraction territory. Look at this, just briefly falling in here. S&P Global. Sorry, that's not this one. The BOE. Okay, nothing else. Nothing major. Manufacturing HCOB manufacturing PMI from the Eurozone. Yep, remains. Oh, actually, it doesn't remain. It just dropped into contraction territory, right? Germany as well cannot get into expansion for now. The manufacturing, right? Not very good. Not very good. No. So, ladies and gentlemen, let's have a look what's happening this week. Today, from the big events, S&P Global Manufacturing PMI from the U.S. We will keep that in mind. At the moment, we're expecting a little bit of a decline. That's fine. I mean, in general, not fine, but certainly, yes. ISM manufacturing, there we go. That's going to be a number to watch. ISM manufacturing PMI is expected to remain inside kind of the in the contraction territory below 50. So look, I will interpret the data this way. If we do see a number above 48.6, I think that we could see a little bit of a boost in the market. We could see a little bit of maybe a move back up here. But if it remains below 50, I'm really very careful with that, to be honest. I don't want to rush into things. And again, like I said, it's in general, not everything is good. I mean, yes, we are seeing some positive news coming out still from, from big tech companies. However, what I've noticed right now that there is a little bit of a slow calming moment in what's regarding tech, because um, I think that now the big talk is about the Federal Reserve interest rate decision in December, which is a done deal, to be honest, and also the new Fed chair, possible Fed chair, because from what I understand, the U.S. leader decided he already kind of picked his candidacy. Anyway, I'll talk about that a little bit in a moment. Going further in terms of other economic data, on Tuesday we get Australian building permits. So if you're trading something Australian related, keep that in mind. Japan consumer confidence, well, it still is on the lower side, I would say. Going into further data, we have nationwide housing prices from the UK. This is going to be an interesting one. We're actually expecting quite a decent decline, from 2.4 to 1.4 on a year-on-year basis. So let's see if that's going to be the case. Going further, European inflation numbers are going to be on the lookout here, together with the unemployment rate. Unemployment is expected to come out at 6.3. The inflation, by the way, this is the flash, not the final one even. The flash one is expected to increase to from 2.1 to 2.2. Look, regarding the euro inflation, most likely it will come out somewhere close to forecast, because again, with the European data, we rarely get like fireworks or something like that. So most of the time it's kind of close to close to what is expected. Ladies and gentlemen, can I just ask if whoever's watching, can you hear me and see me well? Because again, I'm seeing that there are some lags, seeing that there are some delays in the stream. So, hopefully everything is working fine. You can hear me and see me well. But yeah, going back into the economic calendar, Tuesday is kind of somewhat of a boring day probably, but Wednesday we're jumping into more data here. Australian composite and services PMIs. Keep your eyes on that. GP growth from Australia. Also, basically, if you are trading AUD, this is something to keep in mind. So we could see some increased volatility in the AUD pairs. From China, rating dogs composite and service PMI is coming out. Okay, the same story from Germany and the Eurozone and the United Kingdom. So, but only the HCOB from the German and the European side, and the S&P Global from the on the UK side. PPIs from the Eurozone as well. So a lot of European data in a way, with actually market moving UK and EU data. Something that, we have the Treasury gilt auction. It's going to be an interesting one here. This is if you're watching, the index, if you're watching the FTSE 100, keep your eyes on that. ADP employment change. Now, this is the new number that we're all kind of, keeping a close eye on. So ADP employment change. This is not the weekly one. It's actually the big monthly one. So look, what can I say about this one? Last time we got a positive number. We got a number that kind of bounced back from negative territory into positive territory and came out at 42K. The current forecast is for a 20K. So basically, we're expecting a bad number. Not like NFP, which is basically crazy to the upside, kind of, But look, also what's going to be interesting to see if, okay, the number is already on the lower side, and if we're also going to get a revision of the 42K to the downside. Now, this is where I think that we could see some issues, we could see some problems. Again, the market could, take this as a negative, and most likely it will take it as a negative, because then it kind of throws this little shadow on the NFP, how credible NFP is. And we know right now that, well, the NFP is not really credible at this point, because we had some delays, we had some lags, and normally, we should be getting maybe at the beginning of the month of December, the job numbers from the US in basically the same week as the ADP on Friday. But no, we're not going to get that. We're only going to get that on the 16th. So basically after the 10th of December, which is going to be the Federal Reserve interest rate decision. So yeah, and this is going to be a little bit of a messed up moment in my opinion. So yes, we'll see how that plays out. Going further, we have a bunch of other important economic data sets coming out. So from the U.S. industrial production number, manufacturing production, so keep that in mind. Canada's S&P Global and U.S.'s S&P Global Composite and Services PMI, something to keep in mind, and ISM Services PMI. So basically a lot of PMIs. We're getting like a PMI week this week. So keep that in mind. And also, if you are looking at the oil market, and at the moment the oil market is quite interesting. So yes, we could see some movement on the EIA crude oil stock change. But again, I think that we already kind of got the little reaction in the oil market because of the OPEC Plus, so where they decided to stick to their stick to their reduction in output for the first quarter of next year. That's the forecast, the prognosis right now. So hey, let's see if that's going to be the case, and it will continue to be the case. But certainly, yes, we're watching the oil market very, very closely. Going further, Australia, yes, and you can see that this week, AUD is going to be one of the top currencies to trade, because again, just because of the amount of data we're getting from Australia. So yeah, going further, the Swiss and unemployment rates coming out, so that's something for you to keep in mind if you are trading the Swiss franc. Going further down the day, the trade balance of the US. Let me have a look. Okay, import-export price. Yes, okay, that's when the usual weekly earnings. Right, okay, so this is interesting. So this is for Thursday, 4th of December, and but it says here the U.S. Import and Export Price Index. So this is kind of should be coming out on Wednesday. But anyway, okay, we'll see if this is correct. So this is, you see, the problems are right now with the Bureau of Labor and Statistics, because Mm, it's kind of it can change very quickly, and like for example, or also one of those things that we're not gonna get the October and NFP is gonna be now kind of embedded into November number, so we're not really seeing the October picture, we're seeing the November picture, and I don't know how they're gonna play this, but in general, the whole data set is already very questionable. Um, IVPMI, Canada's IVPMI coming out later on. Yep, we're expecting an improvement here. Okay, we'll see how that plays out, and kind of and a few speeches here and there. That's kind of it. Then Friday, normally, like I said, we should be getting the labor market, U.S. labor market numbers from the Bureau of Labor and Statistics, but we're not going to get that. Also, we should be getting jolts, but we're not going to get that. Okay, well, so keep that in mind. So yes, Japan household spending. Now, this is something that I'm going to be keeping a close eye on because again, at the moment we're really expecting a big decline from 1.8 to 1% on a year-on-year basis on the Japanese household spending side. Well, let's see if that's going to be the case. Going further, and yes, we have a few data sets from Eurozone. We have the estimates for the GDP growth of the Eurozone. Let's keep that in mind. Canada's labor numbers. Now, Canada is kind of stable, in terms of delivering its data, and well, we can see that. So if you are trading something Canadian dollar related, so keep your eyes on Friday on the Canadian job numbers. So also the big announcement will be from the U.S. side, the PCE readings, the Fed's favorite inflation metric, the personal consumption expenditure index. Now this one is kind of the last piece of info that the Fed will get before delivering its interest rate decision on the 10th next week, because inflation here, whereas the consumer price index is going to come out on the 18th here, according to the Bureau of Labor and Statistics. So on the 18th, so basically we're going to get the NFPs after the interest rate announcement, and we're going to get the inflation numbers as well after. So it's a little bit of, I would say, a bummer in a way, and it puts this whole rate decision making, makes it a little bit questionable in my opinion. It's everything is really politically driven and politically motivated. So yeah, and I think that look, I was saying about last week about Powell, that he's going to be leaving in March April time. No, actually, he's going to be in May. So from what I kind of updated info from my side here, it's going to be May. So look, I think that he's going to just do whatever he's asked to do, because again, he wants to leave on good terms, so that there wouldn't be something like a witch hunt or something like that after, because then he's just a regular former Fed chair, like Mr. Bernanke, so or some, Janet Yellen, so all those guys. But look, of course, we're keeping an eye on this number. At the moment, the problem is that it's way above, sorry, not way, but it's above the Fed's inflation target, which is at 2%. So yeah, if it's going to come out, let's say even higher than the forecast, because the forecast is already on the higher side, if it's going to be closer to 3, I really don't know how they're going to justify the rate cuts, because again, this is what we're expecting right now, 87% um, for a cut. And I talked a lot about this, and I said that, look, I mean, in the beginning of November, I said that they're going to still stick to they will stick to the cut, because look, it's the plan, and like I said, it's all about pleasing a few. So yeah, keep your eyes on this on the PC. Some Michigan numbers here. Michigan inflation, yeah, something like that. Nothing, yeah, nothing big there. But the big number will be the PC, because, like I said, it's going to be the last one, the last kind of important number for determining your policy for the Fed, for determining the Fed's policy. So, ladies and gentlemen, anyway, let's have a look at the charts. What we're seeing today. Today we're seeing a little bit of a decline in the futures. Now, in a way, it's in a way everything is looking still somewhat bullish. Look, I said to you before, and I'll say it again, I will get a little bit more excited with the upside if we do break this downside line. We did, but then I said that, look, if we do also climb above the 50,000 kind of 600 zone right here, then yes, I'm going to go for some higher levels. But I think now this level can be adjusted, and I think that we could actually keep our eyes on this little hurdle here, this 50,322.20 zone-ish, roughly on Nikkei. And another thing is that if we do continue to trade above the above this downside line, then yes, there could be a rebound and a push higher. Look, I also said before that if we, whenever we break a trend line, whenever we, if it's a downside or an upside, doesn't matter. We break a trend line, we tend to revisit it from the other side. Well, let's see if that's going to be the case. I mean, well, actually, it is the case, but let's see if we can get a rebound. That's probably the more important thing. If we can get a rebound, yes, great, wonderful. I'll consider a move higher. If we cannot get a rebound and we start dropping lower here, I'm not gonna sound the alarm yet, but certainly keeping an eye on the 48,235 zone here, marked by the lowest point of November, will be important, because if we do clear this one, a forthcoming lower low will be confirmed. Let's have a look at what's happening with the Shanghai Composite. This one's enjoying the moment. This one is pushing higher, but still, from the technical side, I would say I will stick to my rule that I'm going to wait for a push above the 3,922 territory right here, and then I'm going to, take it from there. If I get the clearance here, I'm going to go higher, but at this point, no, I'm just looking at the downside scenario. In terms of the, at the moment, not looking at the downside scenario. Sorry, totally kind of got lost here. Look, let's probably a lot of words, not much clarity from my side right now. I would say this way: I'm going to lean a little bit more towards the upside if we do clear this 30,922 territory. But at the moment, I'm just kind of really probably more on the neutral side. Because I cannot really get comfortable with the downside as well, because I need to drop somewhere below this 3,816 zone. If I can get that move, wonderful, I'll go lower. But at the moment, yep, I'm just playing this very carefully, and I'm not really rushing into things. So yes, for now, let's keep an eye on some of these barriers here, and let's see which way we're going to break out to. Dow Jones Industrial Average. Now, look, what I wanted to talk about. So we had the news coming from the POTUS, and basically he decided to pick his next candidacy for the Federal Reserve. So this is a screenshot that I did from on Bloomberg, and this was about a month ago or something like that. So where everybody was talking like who's going to be the next one. So yes, in a way, everybody's favorite was the Christopher Waller candidacy, but apparently we're seeing that there is a lean more toward Kevin Hassett. Now, look, the problem the market has, I think that he's a little bit more, pro U.S. leader in a way, and kind of can be seen as in a way of a marionette, that was placed in the Fed. Again, we'll see how it is in reality, and of course we'll see if he wins this. But certainly the market will be very carefully monitoring this, and we'll see if that's going to actually be the case, because certainly when the president of the United States kind of does pick and choose, then most of the time the market kind of goes with that. So It's going to be very interesting. So we'll see if actually, he's going to be more on the Doge side, and if he's going to continue with those rate cuts, or actually he's going to, address the inflation issue more. We'll see. Anyway, coming back to the markets here. On last week, it was a beautiful week. We had a strong rally to the upside here. Look at this. I mean, Friday, of course, Friday was an interesting day because we we finished off November with a, when the whole CME group was down for 10 hours or something like that. And we're starting off December with our system, our the systems down on our side, here. So basically, yes, everything is really interesting lately. So look, long story short, for now, if we look at the cash index where we're currently trading at, we're trading around 47,500. So basically below Friday's close, not far from Friday's opening level. And the moment what I said to you last week was that if we do continue to trade here below this hurdle, below this 48,000, then yep, I think that we could see another decline. So I'm not really, like I said, rushing into upside yet. I want to see what's going to happen here. For now, I'm not, like I said, I'm not rushing. But if we do clear the 48,000, I think that this is kind of opening the door to some higher levels. But then again, 48,432 is the one that I'm watching here. If we do clear this one, if we do clear the highest, the current all-time high, then yes, I'm going to go further north. The S&P 500, similar story. Look at this. I mean, this one, actually, this one's looking a little bit more positive than negative because we had a great breakout here. We stayed above it, and looking at the cash index right now, we'll see that we're currently trading at around 6,810 on the cash index. So it's a little bit below this downside line. Now this is very interesting. If we continue to trade today below this downside line, I really doubt that we could see further move north here. So, keep your eyes on this. Maybe a little bit of a correction here could happen. Going into NASDAQ, again, had a great run, had a great push, but now looking at NASDAQ, where we're currently at around 25,000, kind of 250 zone. So that's below the let's delete this alert, is below the Friday's close, but still above this barrier that I talked about. This was 25,222, 23 zone. I said if we do clear it, I'm going to go higher, and we cleared it. We went higher, so but now we're seeing on the cash index, we're seeing this one retracing back down, but still above this hurdle. So if we do stay above it, I think there is a chance of a good rebound like this and a push higher. But if we do break below it, then yes, I'm leaning towards leaning towards the downside. The German index DAX. Okay, today what we're seeing here is a retracement. The market is a little bit fearful. Maybe the market is not liking the candidacy that the U.S. leader chose for the new Federal Reserve chair. Maybe again, we really don't know yet. We want to see what's going to happen during the U.S. opening bell, because the U.S. is getting back into action, and they will be trading normally today. So the full opening. Let me just double check if there's going to be, yes, the full kind of full normal, no holidays, no nothing, which is fine. So yeah, we'll keep a close eye on this one. We'll see what's going to happen here. Are we going to actually drift lower to the downside? But from the European side, again, we're watching those PMIs. We're watching those inflation estimates this week. So DAX could be actually one of those that could experience a little bit of volatility here and there. So I'm not excluding the upside scenario yet, because again, this is where the interesting bit comes in. I mean, maybe we'll see a retracement back down, because look, maybe we'll test this 23,530 zone, we could get a hold up here. And if we do rebound, wonderful. I'm going to consider a larger correction back to the upside. If we do fall below the 23,530 zone, I think that yep, we could see some action to the downside. The FTSE 100. The FTSE 100 is at an interesting spot here, and hey, if we do fall back below the 9,695, 96, then yep, I think that there is a chance of a drift lower here. So we could see a larger correction back down towards this upside line, towards the 50-day EMA. But at the moment certainly we are carefully leaning towards the upside, just purely because we're trading above the 9,695 territory right there. Very quickly on the DXY side, the DXY, the US dollar index, yep, we broke this upside line and we broke. So initially, if you remember, I was talking about a possible ascending triangle pattern, where I said that look, if we do drift back down, let's see what's going to happen. What's going to happen with this upside line, which kind of is the lower side of the possible ascending triangle. But then we cleared it, and I said that if we do clear it, well, I'm going to lean to the downside, and I'm going to stick to that. I think there could be some more downside here. And I think that we could see maybe even a push back to the 99 zone. I talked about this index in the beginning of autumn, and I said that look, I'm kind of expecting maybe a little bit of a retracement back up here, and this is where where we were. I said, look, we could see if we do remain somehow above the lowest point of July, near the 96.38. We did pierce through it, but then we pushed back up. If we do stay above this area, then we could see a rebound. We could see a rebound and basically go into winter, allowing the consumer, the U.S. consumer, to feel that their dollar is not really worth nothing, right? I mean, so going into the holiday season, so that the shopping experience and the traveling experience would be still somewhat pleasant. So we did see the US dollar kind of recovering a little bit, but now although we're still not done with December, still there's plenty of shopping to be done. Maybe the market's kind of already calming down, and maybe they were not expecting that much of sales or something like that. Maybe that's it. We're happy. We're done now. Maybe it's time for the US dollar to go back down. Look, because the whole point is, of course, are the exports. The US exports, because those need to be still attractive to the global market. Well, I mean, lower dollar can help that with that, and the fact that we're expecting lower interest rates, that's also kind of applying pressure on the US dollar. That said, am I giving up on it? No, not yet, not really, because I think that what we could see here, maybe a drift back down here, if we fail to go for this lower low here. If we start reversing a little bit earlier, around maybe 98 zone, something like that, then hey, maybe it's going to be a nice, beautiful formation of a higher low, and maybe then we can go for a higher high. Who knows? Ladies and gentlemen, let's jump into the currency world very quickly. AUD USD. So you remember I talked about the AUD pair, basically AUD pairs in plural, because those are going to be the interesting ones, potentially could be the interesting ones this week, because again we have a lot of Australian data, and what can I say? It's something to keep in mind. Look, AUD USD, I think what I want to do here is I want to tidy up the chart a little bit. So I previously had this downside line, which I think I'm going to get rid of. Yep, I'm going to get rid of, because what I'm going to do here is I will just keep in mind some of these barriers here. I will keep an eye on this little hurdle, the 0.6580. If we do If we do clear it, I think I'm going to go for a kind of a larger correction back up because it seems like we're coiling up here a little bit. So yeah, it's like I said, we could see a nice push higher, and I'm going to keep an eye on this downside line taken from the highest point of September. So yeah, long story short, for now, there is a chance for a move higher, but again, let's not rush into things, okay? Because yes, although a DXY, the US dollar index, is pointing a little bit more towards the downside, let's go slowly on AUDUSD, okay? Because again, if the stock market suddenly reverses lower, then, well, this could be a bit of a problem for AUD despite the weak US dollar. AUDNZD. Look, I talked about this potential falling wedge idea. Let's see, I'm going to stick to that. And we did test this area right here. So let's see if this is going to stick. If this pattern will stick. If it does, then yeah, there is a chance for a push higher. Let's see. But then again, confirmation break is always needed, ladies and gentlemen. AUDJPY, our risk on, risk off monitor. Yep, beautiful rejection from this 102.40 zone. If we do want to see a further move north, then yes, certainly a push higher through this barrier is needed. This is the highest point of November of last year. So if we do clear this area, and we can see that in this November we flirted with that area, but we kind of failed to stay above the previous highest point of November. So yep, now the question is if we can actually clear this zone. Look, we're still trading above the upside support line, so any move up until this upside support line, up to this upside support line, could be seen as a temporary correction before another possible leg of buying. And if we do see a break of this upside line, then yes, great. More sellers here could join in. Yeah, we'll take it from there this way. It's going to be a very simplistic approach, so I'm not trying to really invent the bicycle here. NZD USD, so beautiful push higher. Look, I'm kind of considering a little bit of a retracement, maybe something like that, and then kind of a further push north. Let's see if that's going to be the case. Euro USD. So yes, as I said, we are getting a lot of economic data from Eurozone, from Germany, from Eurozone. So a lot of PMIs. So keep that in mind. And look, we're approaching the upper side of this little box where we're trading in. So if we do clear the upper side here, because we're currently near the upper side, maybe we'll go for a higher high, and maybe we could start aiming for the 1.1779 and something like that. But if we do fall below the 1.1473, then I'll consider the move lower, because all this territory here, I'm not really touching it. I'm just observing the price action. Going into EURUSD very quickly. Okay, this one looks a little bit more positive than negative, but I need a clearance of the 200-day EMA wherever it's going to be at this point in my chart. It's around 0.9348, something like 49 zone, so basically 50. So 0.9350. If we clear that, I will consider a move higher. Let's jump into GBP. GBPUSD, ladies and gentlemen. So yes, looking quite positive still. So basically, look at this. We're flirting with this hurdle, the 1.3216. I talked about it, and I said that look, if we do push and stay above it, then I'll lean towards the upside. I'm still going to lean towards the upside, but cautiously. Why? Because we have our EMAs here, which somehow the 50 and the 200 are providing strong resistance. So I need now at this point, I need this clearance here of these EMAs. If we can get a clearance of these EMAs, then great, more buyers could join in. USDCAD, ladies and gentlemen, USDCAD, boom, there we go to the downside, and we clear this upside line. Initially I was thinking maybe it's going to form something of an ascending triangle pattern, but there we go. Look at this. This is what I keep on saying. Wait for the confirmation break. And we got the break through the upside line. And now we're flirting with the so-called neckline, potential neckline of a potential double double top pattern. Maybe it's not even going to be a double top. Maybe it's going to be a complex head and shoulders pattern. What I mean by that, maybe this highlighted zone should be here. Now, if you look at this, then maybe it's a lot of maybes, right? Maybe this is going to be the neckline of this bigger formation, bigger head and shoulders formation. Left shoulder here, double head, and then maybe we'll form something like a right shoulder somewhere here, and then break lower. So if we do fall below the 1.3891, 92 zone here, I think that this is where the interesting bit comes in, and we could see some, some action to the downside. USDJPY, beautiful decline here, breaking this upside line. So yes, a little bit of strength in the Japanese yen. Look, don't forget that this month we're getting a lot of interest rate decisions. So, yep, we have the BOE, the BOC. We have the Fed, of course. We have the BOJ. Um, Look, it's a busy one. It's a really busy. ECB is coming out as well with interest rate decisions. So it's kind of the last dance of for the central banks in 2025. It's going to be an interesting one. It's going to be so a lot of action could be seen in in all these currencies and currency pairs, which of those central banks, of those currencies of those central banks. So yeah, it's like I said, if you are trading Forex, there is certainly an opportunity there, and we are at some interesting levels, in my opinion. USDCHF, one of my favorite ones. Okay, look, I am cautiously bullish on this one, but despite the weaker DXY, but at the same time, I don't want to rush into this. I don't want to make a mistake. So there could be some issues with this upside, further upside. But then with the downside as well, there's like, so I'm gonna leave it for now. To be honest, I think that there's no clarity yet, unless it's gonna start popping above the 0.8124, and then yeah, we could go from there. Ladies and gentlemen, let us jump into kind of the commodities sector because wow, not this one, silver, but let's pick up on gold first, okay? So I talked about this last week. I said that if we do break the symmetrical triangle pattern, we could, I will consider the next short-term directional move, and we broke into the upside, which is fine because actually everything is playing out very nicely according to all the TA rules. Because the prevailing trend was it is still to the upside. We enter a symmetrical triangle, so the greater chance for that one to break out is to the upside. Well, there we go. Yeah, for now, what can I say? For now, it's pointing towards the upside. I think there could be some more upside, but I was speaking to my colleague this morning, and kind of what I said that in a way gold could continue rallying, but it will, I think, depend this time more on silver because this one is on fire. Look at this. Look how technical it is, and look how well it's playing out. It had a nice ascending triangle pattern here. We broke to the upside. I talked a lot about this. I said, wait for the clearance, and then we can do something about it. So cleared this all-time high here, and let me just actually get rid of this. Actually, no, you know what? No, let's leave this alert. I've put the alert here. So for now, everything's pointing more towards the upside. And I think, I talked about this in one of my sessions that if we do clear this barrier, the 54.5 zone, then I'm going to aim for the 56, 58, and eventually for the psychological $60 mark. I think that's quite doable. I think it's, yes, it could be the case. So let's not rush into things. Certainly, we're currently hitting new all-time highs. This chart is just ridiculous. The monthly chart, I mean, we gapped here, right? I mean, let me just get rid of this arrow. I think it's a little bit in the way. And this one as well. Let's get rid of those two arrows and let's jump back into monthly. Look at this. We gapped to the upside. we closed on Thursday and Thursday, sorry, and closed on Friday last week, and that was November, and now December opened up with a huge gap to the upside. I mean, at one point this will have to reverse lower. Just it cannot really continue like this. I mean, you have seen these big moves to the upside here, and history. I mean, last time we saw such parabolic moves were back in 2011, 12, 11 actually more. And then we started correcting back down after a few years. It took us, a year or something. And look, I mean, but actually, the corrections do happen kind of relatively straight away. Well, straight away when we're talking about like these monthly candles from the monthly candle perspective, but still it does require us some time. At the moment, I think what I can see here right now, silver is trying to go for another all-time high. It just needs to clear the area around the 57.85, because that's the 86. Yep, that's the current all-time high. And judging from this, whatever comes up like this must come down eventually. The only problem is that we could still see some action to the upside in silver. So keep that, ladies and gentlemen, in mind. So yeah, jumping into platinum, ladies and gentlemen, as well. Platinum had a great run. It did pop above this downside line. This is a good example of a descending triangle pattern, which does not really work out well. And we always, I always keep on saying that wait for the clearance and then of one of the sides, and then we'll consider the next short-term directional move. So despite the pattern, let's say, being more bearish or bullish, um, we need to wait for the confirmation break. And this is a clear example of why. Palladium. Now, Palladium is also a similar story. There we go, popping like crazy. Back to the 1,500 zone at one point. Now we're seeing a little bit of a retracement, so I'm not going to rush into things. But in general, my target got reached, which is the 1,486, and this is what I was aiming for. I said that if we do clear the downside line. Copper. Now, copper is beautiful here, and we are seeing some beautiful movement here through this upper side of the range. We're at all-time highs, of course, and I think that with copper, it could still drift a little bit more to the upside. Sugar, my favorite sugar, and today we're seeing a decline, but it's a correction. It's a correction because we're still above this upside line, taken from the low of the 10th of November. So as long as we stay above that upside line, I'm going to continue targeting the upside. Probably what I'm going to do, what I'm going to add here right now is this the high of last week here near the 1.1525. A nice good pop above it just could add some extra confirmation for us. Soybeans, just a quick glance. Not much, not much. Actually, I'll leave it there. Now, oil. Now, this one's interesting. So, I talked about oil last week as well. We were flirting with this upside line here, taken from the low of the 9th of April. And we saw a rebound. We saw a rebound. Today, we're pushing back up here, but we're getting a hold up below this downside line. I am still bearish on oil in a way overall. Although we are seeing some signs of positivity, but look, I will say this way that if the peace plan that the U.S. presented, the peace plan between Russia and Ukraine kind of goes into effect, and there is actually a peace plan, we could see Russian energy kind of going back into the market more freely, and this could lead to some oversupply in a way. And maybe that's what OPEC is kind of seeing already, and that's why they're saying we're going to halt production, just because if they continue to increase output, and if let's say there's some more output from somewhere coming, right? Then you're gonna have a very big crash in the market because there's not much demand at this point. So, just be let's be realistic, okay? So yeah, Look, from purely from the technical side, if we do break this little downside line, I'm going to lean a little bit more towards higher levels, but certainly I'm not going to rush into anything. Okay, so for now, just this little picture, and let's jump into Brent. Just similar story when we're in a nice falling channel, which by the way could be seen as a nice bullish flag here. So in a way, that's why this one looks a little bit more bullish in the short run, actually, not really in a medium term or something like that. No, in the short run. So let's see if that's going to be the case. And natural gas still targeting that psychological 5 level. We came very close to 4.9. There we go. I talked about this on Friday, and we cleared the barrier. It went higher. We found resistance near the highest point of this year, and we drifted back down. So what I'm going to do right now is I will keep an eye on this 4.9. If we do clear that, the psychological 5 level is my next one to watch. Ladies and gentlemen, for dessert, let's jump into the crypto world. Bitcoin. Look at this major decline today, but but it's the interesting bit here that are we actually going to see a further decline, or actually is this going to be something of a higher low moment? If that's the case, well, I mean, hey, I will consider a move back up. But like I said, I need to see if this is going to be a higher low moment. If it's going to start falling below the $83 mark again, then it depends a little bit. If it's going to form something up a double bottom, but if it still continues to slide and falls below the lowest point of November near the 80,560, then yes, further declines are possible. Bitcoin Cash, now this one's looking somewhat positive still. Looks like a bullish flag in a way here. It looks quite positive somewhat, but again, some confirmation breaks are needed. So one of them is this break through the downside line. If we can get that move, amazing, great, more buyers could join in. For the downside, if we do fall actually back below the 200-day EMA, in my opinion, that could attract a few more sellers. XRP USD, so Ripple is falling, or actually testing, coming closer to a test of the psychological 2 level. And yeah, it fell below this 2.0660 level I talked about previously. So can't really get way too positive for now. But if it somehow pushes back and stays above this, and we see a little reversal back up, hey, maybe this could be a little bit of a cue here that the cryptos would like to recover somewhat. Ethereum also similar story. Let's see if we can go for a lower low, but for that we need to see a drop below 2,636 at the moment. Let's see if we're not going to make a higher low. Now, different story a little bit on these other cryptos like Litecoin, for example, right? Litecoin, I do like Litecoin, but now it's testing my 76.40 zone here. Also, I talked about this. I said, look, if we do continue to trade somewhere below this 90.30 zone, I mean, I'm considering a move back down. And this is what happens. So this is wonderful now. So if you're looking for some lower levels, you need to kind of wait until we get a clearance of this 76.40. Yep. If we do look at, we try to look at some higher levels, then, well, the preference for me here would be to wait for a push above the 87.83 zone right there. And then, yeah, we could take it from there. Dogecoin. Now, Dogecoin is interesting here as well. And we fell below this little hurdle, the 0.1430. So if we do stay below that, then I'm going to continue targeting the downside. Certainly, I'm going to keep an eye on this little hurdle, the low of November near the 0. What is it? 0.1331. If that gets cleared, a forthcoming lower low will be confirmed. Polkadot. Now, Polkadot is conveniently sitting still above 2 level. It seems like that psychological 2 level is the one that we're going to be carefully monitoring. And if we do rebound from that psychological 2 level, ladies and gentlemen, and we somehow manage to climb back above the 2.35, I think that this is going to be an interesting moment for the upside. Tron, similar, yes. It's trying to go for the downside here, but again, let's see if it's not going to form something of a higher low, because again, it tested this downside line, but it moved lower, but not much in a way, not like Litecoin or Polkadot or those, right? It moved more a little bit more like BTC or XRP or ETH. So yeah, we're like I said, we'll see if this is going to hold somehow. If it does, all eyes are on this downside line. If we break it, then yes, we could go a little bit more to the upside. And yeah, and kind of, ladies and gentlemen, that's it. That's it. I think I went through all these instruments here. So yeah, I think you maybe got the picture. Look, if you have any questions, feel free to throw them out there. Because again, the market is, like I said, it's an interesting one. We're going into December. December, by the way, is going to be somewhat of a short month. Of course, understandable. We're going to have some, holidays. The U.S. stock market here. Let me just double check. The US stock market will be open for 15 days straight. Yes, for the first 3 weeks we're going to be okay without any disruption, and then we're going to jump into the final full working week of December, starting commencing on the 22nd. We're gonna see, we're gonna jump into holidays, and then yeah, after then the final and during the final week we'll have like 3 trading days in December left. So yeah, it's gonna be an eventful one, I think, an eventful December in my opinion. So keep your eyes on that, ladies and gentlemen. If you don't have any questions, so thank you very much for watching and listening. I really appreciate your time, your views, your likes, your comments, everything. So I hope you found this session useful. Like I said, it was just a chilled little session for to go through the markets to see what's happening. I hope you liked my little Christmas tree in the background. So trying to get that festive spirit and just to see if the market can actually bring me to that festive spirit. Ladies and gentlemen, thank you very much, and I shall see you on Wednesday. Bye for now.